There are moments in financial history when the wealthiest people on earth make moves that seem confusing at first, moves that go against public opinion, against mainstream narratives, and sometimes even against what economists say should happen. And yet, every time when the dust settles, those moves end up being early signals of a massive shift in the global economy. Right now, in the quiet corners of private investment circles, one of those moves is happening. Not loudly, not publicly, but quietly, very quietly. Billionaires, hedge funds, sovereign wealth groups, and elite family offices are buying silver. Not the way retail investors do, not for short-term speculation, but in quantities big enough to raise eyebrows in places like Singapore, Zurich, and Dubai. And the question that very few people are asking, yet everyone should, is why? Because billionaires never buy anything quietly unless they know something the rest of the world hasn't noticed yet. And as 2026 approaches, the picture behind this silent accumulation becomes more urgent, more revealing, and far more connected to America's economic future than most people realize. To understand this shift, we need to start with a simple truth. Billionaires do not chase hype, they chase signals. They look for distortions, moments when an asset is undervalued, overlooked, or misunderstood, yet positioned to benefit from bigger forces shaping the global economy. And silver for years has been exactly that. Undervalued, ignored, dismissed as an old-fashioned metal that doesn't matter anymore in a world dominated by technology and digital finance. But what most people don't see is that silver is not just a metal, it is a barometer, a pressure gauge, a mirror reflecting fear, inflation, currency weakening, and shifts in global power. And right now, that mirror is showing something billionaire investors are not willing to ignore. Because every time in history the world has approached a major financial reset, whether inflationary, geopolitical, or currency-related, silver has quietly moved before everything else. It moved before inflation spikes, before recession announcements, before debt crises, before market downturns. And behind the scenes, it moved because the people with the most to lose and the most knowledge started positioning themselves early. They bought when no one was watching, and by the time everyone noticed, the opportunity was gone. 2026 is shaping into one of those moments, not because the world is ending, not because the dollar is collapsing, but because the global economic system is entering a phase of stress that hasn't existed in nearly 40 years. High inflation that refuses to fully disappear, rising global debt, energy uncertainty, geopolitical conflicts, slowing major economies, countries forming new trade blocs outside the dollar, and a world moving toward materials and technologies that rely heavily on silver, solar panels, electric vehicles, batteries, medical equipment, semiconductors, and high-precision industries. But to understand why billionaires are buying silver now, quietly, aggressively, and globally, we need to look at 5 major forces shaping the world before 2026. The first force is inflation, specifically long-term inflation that stays higher than central banks want. Even if the U.S. succeeds in lowering inflation from its peaks, the cost of living remains far above pre-pandemic levels. Groceries, housing, transportation, insurance, medical care. All of it is more expensive, and none of it is going back down. Billionaires know that when inflation becomes structural, currencies slowly lose power. And when currencies weaken, real assets, tangible physical assets, rise in value. Silver is one of the most sensitive metals to inflation expectations. It reacts not to today's inflation, but tomorrow's. Billionaires aren't buying silver because inflation is high today. They're buying because inflation is proving extremely difficult to eliminate for the future. The second force is debt, global debt. The world is carrying more than $300 trillion in combined public, private, and corporate debt. This level has never existed before in human history, and when debt becomes this massive, governments only have 2 ways out. They inflate it away or they devalue the currency over time. Neither of these solutions is advertised to the public, but they are well understood by elite investors. A weakening dollar, a weakening euro, a weakening yen. All of these scenarios point in one direction. Real assets rise because they cannot be printed, inflated, or devalued. Silver, being both a monetary metal and an industrial metal, becomes uniquely valuable in such moments. Billionaires see debt as the spark, silver is the protection. The third force is geopolitical realignment. The world is shifting away from US-centered systems, not all at once, but gradually. Countries like China, Russia, Brazil, India, and many Middle Eastern nations are building trade agreements outside the dollar. Central banks worldwide have been buying record amounts of gold, and whenever central banks move into gold, billionaires move into silver, not because silver replaces gold, but because silver typically surges more dramatically when monetary systems shift. Silver has always been gold's volatile shadow: smaller market, sharper movements, and massive upside when confidence in global currencies begins to weaken. But the fourth force is perhaps the most important: industrial demand. Silver is not just a store of value, it is essential to the technologies powering the future: solar energy, battery storage, artificial intelligence, hardware, electric vehicles, 5G networks, robotics, semiconductor manufacturing, and advanced medical devices. The green energy transition alone is pushing silver demand to historic highs. Solar panels require silver, EVs require silver, AI data centers require silver, smart infrastructure requires silver, and unlike gold, which largely sits in vaults, silver is used, consumed, disappears from the supply chain. Some experts estimate that we may face a silver shortage as early as 2026, not because miners can't produce silver, but because demand is outpacing supply at a rate the world hasn't seen before. Billionaires don't buy headlines, they buy trends. And the trend is clear: the next decade will require more silver than the world is currently capable of delivering. That imbalance is where fortunes are made quietly. But the fifth force is the most strategic of all: the weakening of the dollar. Even if the dollar remains the world's strongest currency, even if it is not replaced anytime soon, a modest weakening can set off a chain reaction. Higher import costs, higher inflation, higher borrowing costs, lower confidence, slower corporate profits, and a global shift away from dollar dependence. Billionaires understand that a weakening dollar is not a crisis, but it is a transition. In transitional periods, metals outperform paper, value moves from currency to commodities, wealth shifts from financial assets to tangible stores of value. This is why billionaires are not shouting about silver. They are quietly absorbing it, slowly, steadily, silently, because they know that the biggest gains happen before the public sees the trend. But now we need to go deeper into the strategy behind these purchases. Billionaires are not buying silver coins or small bars like retail investors. They are buying metric tons of physical silver stored in private vaults in Switzerland, Singapore, and the UAE. They are buying stakes in silver mining companies. They are funding mining expansions in Mexico, Peru, Canada, and Australia. They are building supply chain access that gives them priority when industrial shortages begin. They are not speculating, they are positioning. And that positioning is built on one simple observation: silver is one of the most undervalued assets in the world compared to everything happening around it. Historically, the gold-to-silver ratio averages around 40-1. Today it is more than 80-1. This means silver is priced as if the world does not need it, even while demand is exploding. Billionaires see this gap and recognize it as the opportunity of a generation. But here's the part most people overlook: silver is not only a financial hedge, it is a geopolitical hedge. In a world where tensions rise between global powers, where supply chains fragment, where alliances shift, countries begin hoarding strategic materials. Silver is one of those materials. If relations between the US and China weaken further, if conflict in the Middle East expands, if energy markets destabilize, if sanctions escalate, silver demand spikes, not gradually but instantly. Billionaires are not buying silver for what it is. They're buying it for what the world may become. And there is another reason, one that makes this move especially urgent before 2026, the Federal Reserve's coming pivot. At some point, whether in late 2025 or early 2026, the Fed will be forced to cut interest rates to prevent recession from deepening. When rates fall, the dollar weakens. When the dollar weakens, silver rises. And historically, silver's biggest bull runs happen not during crises, but during Fed pivots. This pattern repeated in the 1970s, the 2000s, even the early 2020s. Billionaires do not wait for the pivot, they position before it. So what does this mean for the average American? It means the world is entering a phase where real assets will matter more than financial narratives, where inflation may rise in waves, not in one straight line, where the dollar remains strong but not invincible, where technology drives demand for materials faster than the market can produce them, where global politics accelerates the value of safe haven assets, where the wealthy protect their purchasing power while the middle class absorbs the real cost of currency weakening. Silver is not a bet on collapse. It is a bet on transition, the transition away from cheap money, the transition towards scarcity, the transition into a world that consumes more and produces less of the materials needed to sustain growth. This is why billionaires are buying silver quietly, not to hide it from the world, but because they know that when the shift becomes obvious, it will be too late for anyone else to enter at a fair price. And here is the final truth, the warning no one wants to hear, but the one that matters most. When billionaires buy quietly, it is because they expect the world to change loudly, not overnight, not in chaos, but gradually, through currency shifts, inflation waves, debt restructuring, technological demand, and geopolitical pressure. They are not preparing for disaster, they are preparing for reality. And 2026 may be the year that reality arrives.